Hello, I'm Brent Stafford, and this is the weekly market wrap-up, brought to you by Crush the Street and Viral Network News. The equities market got another shot of testosterone this week as the Dow Jones and the benchmark S&P 500 flexed their record-breaking muscles once more, following Fed Chair nominee Janet Yellen's confirmation hearing on Thursday. The Dow Jones Industrial Average broke another all-time record, closing at 15,876 points. Not to be outdone, the S&P 500 closed at 1790, exceeding its prior day's record by nearly 0.5%. Both are now set to take out new psychological thresholds, 16,000 for the Dow and 1,800 for the S&P. The Nasdaq Composite Index is also approaching a high water mark, as it's now within 30 points of reaching 4,000, a level not seen in over a decade. Of course, much of this euphoria is a direct result of the Federal Reserve, which initiated quantitative easing as a response to the liquidity crisis posed by the financial meltdown of 2008. Fed Chair nominee Janet Yellen reiterated the Fed's loose monetary policy, stating in her confirmation hearing on Thursday that tapering would be kept off the table for the foreseeable future and that Fed policy will remain accommodative when the inevitable tapering does occur. Not everyone is happy with the Fed's direction, though. Senator Rand Paul is a vocal critic and has vowed to delay Yellen's confirmation process. Also, Euro-Pacific Capital's Peter Schiff went on record as stating that Yellen's nomination will lead to economic collapse.
And she is going to compound the mistakes. She's going to take the QE program and expand it. It's going to be a lot more than $85 billion a month in bond buying. She actually believes that the Federal Reserve can create prosperity, can create jobs and economic growth by creating inflation, by printing more money. And that's what she's going to do. And because it's not going to work, because it's going to make the economy worse, not better, she's going to do more and more of it until ultimately there is a currency crisis and the dollar collapses and then brings an end to the madness.
All right, let's talk currencies and check in on the Forex markets. The U.S. dollar index closed up the day's session barely above the 81 level in what has been a choppy week of market action. The confirmation hearing of Janet Yellen, combined with international market developments, have brought in some measure of confidence in the greenback. The dollar-yen pair hit a milestone Thursday after cracking the 100 mark, a level not seen for 2 months. A resurgent move in the Japanese stock market as well as an improved sentiment in the Asian sector are positive fundamentals that align perfectly with the Bank of Japan's own monetary experiments. The euro was trapped in whippy conditions this week, but still maintained an overall positive trajectory based on strong moves in the European equities market, particularly in Germany, where the DAX closed at an all-time record high at 9,149 points. That's it for currencies. Let's turn now to winners and losers and our picks for the week. The winner for this week is Jack in the Box, ticker symbol JACK. Shares are up nearly 5% this week based on investor speculation towards the company's forward guidance. It's sentiment shared by Oppenheimer Funds, which last week issued a statement suggesting that shares will move higher based on retail comps, new business drivers, and more favorable cost margins. Jack in the Box doesn't have a high profile in the investing community, but its stock has actually performed quite well over the long run, outpacing both Wendy's and McDonald's over the past 5 years. The loser for this week is Genco Shipping and Trading, ticker symbol GNK. Despite third quarter earnings exceeding the prior reporting period by 30%, annual revenue for fiscal year 2013 is likely to come in 11% below 2012. However, what's really scaring off Genco's investors is the debt load, where liquid assets can only cover 7.5% of current liabilities, and with top-line revenue under serious pressure, Genco desperately needs its lenders to either modify its debt agreements or waive its obligations to avoid foreclosure. Well, those are our winners and losers for this week. Now we want you to weigh in. You tell us in the comment section below what company you think is the top pick and the stinker for the week. Finally, let's turn to precious metals, which had a terrible week. Gold was again hit hard by the bears following last week's volatile market action. The bulls did stage a modest recovery, putting the close at $1,286 per troy ounce. Silver also took a beating, with the current spot price 25 cents shy of the $21 level, which it lost on Tuesday, when an across-the-board sell-off negatively affected the commodities market. Finally, palladium did manage to pull within 4% of last week's high, but it too was affected by the downturn in the precious metal sector, despite bullish fundamentals. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure you subscribe to our YouTube channel and find us on Facebook and Twitter. For Viral Network News and Crush the Street, I'm Brent Stafford.